Hey guys, I'm here to give you a little update on the crypto bots and the dashboard performance, how it's doing. So let's get into it. Now, I've had these bots trading in my account for about 3 months now, and I'm happy with the results. It's been profitable so far and not particularly stressful. I find manually trading to be very stressful and take way too much psychological and emotional bandwidth. And in 2025, I don't want to take any kind of manual trades unless it's some kind of bizarre unicorn trade like the Bybit getting hacked for a billion ETH or something like that. So I'm getting MTP automated, and also these bots have been trading for 3 months already. We've had some updates to some of the bots, so let's quickly go through them. But what's really interesting is we have an estimated returns calculator too. So we'll come back to that in a little bit, but I just want to look through the strategies right now. So bot one is a uh, spot per price divergence. Now, we're trading crypto perpetual futures data. So our max drawdown is um, not a percent, it's just a number of loss. If you want to know what recover rate is how many days it takes to come out of the max historical drawdown. Given average rate of return, it's just something that the dev likes to pay attention to. So we are trading 13 bots, and using them together reduces that recover rate significantly. This one took 2 years from 2023 to 2024. Honestly, like the way the recover rate, it's not, it recovers faster than the recover rate generally. Because usually after a max drawdown, the return is greater than the average rate of return, right? So just so you know, this is the recovery rate isn't how long it actually took to get out of a drawdown, but how long it takes to get out of drawdown given average return. And since there's a big drawdown coming in, usually the average rate of return is already recently negative. It just generally the actual recovery rate is less than the estimated recovery rate. So, okay, more spot perp stuff. This one, okay. Why does a lot of the data start in 2021? It's true, we would like more data and not just to trade in a post-COVID world, but we're trading a new asset class which doesn't have data that goes back very much. It's both an edge and an opportunity. Some people won't touch it for this reason, but our strategies are not just based on um, trading ideas, but or not just on data, but on fundamental ideas. It started with a fundamental idea, and we back tested it and found that it did hold up. So we got bot six, which is breakouts and breakdowns. Didn't do very well trading these breakdowns. Yeah, it hasn't really done anything since 2022, actually. Or I guess since 2023. It's kind of interesting. Bot seven, extreme moving average. This one buys when price is like really, it's long only, like super far away from the moving average. So this one is based on price action. And then we have some Bitcoin only bots, long only on breakouts. Here's another long only using moving averages, another long only breakout. So the idea is just not to have to trade crypto manually at all. Dip buys haven't worked so well in the past years. This is one of the reasons okay, this is a new one. Ichimoku trend plus 4-hour stock RSI plus ATR trailing stop. Didn't work very well here. But this is why trading more strategies is a good idea because here's the short breakdowns. Okay, this is a new one. Which yeah, it didn't work at all during the market coming down, which is weird. Yeah. Anyways, so let's go ahead and look. So here, I have my historical risks, max risk set to 60%. It doesn't mean I can't lose more than 60. It just means if you look back at the maximum drawdown that happened since 2019, if that happens again, I would lose 60% of my account. And you might say it's a lot. I know it's a lot. Now, if we look at this is a new thing, which is the estimated returns calculator. So given a drawdown of 60, and the recovery rate right now is new all-time high in 3 months on average. Given that, 109 days. I guess it's closer to 3.5 months. So the average historical return is 16% per month. Now, it's really important to say this number is non-compounded, so the compounded number would be significantly less. I don't know what it is. We could actually calculate it, but I asked the dev to make the change. How to convert a non-compounding return to a compounding return. Let's find out what it is. Okay. You need to calculate analyze return using the formula 1 plus non-compounding return minus 1. I'm just going to ask ChatGPT to do it, actually. Let's do this. ChatGPT, could you please turn a non-compounded monthly return into a compounded monthly return? The non-compounded is 16% a month, going back to July 2018 until March 2020. Let's say February. Yeah, March 2025. So I'm just going to have it do the math for us. And get a better idea, but I've already asked the dev to make this update. Okay, it says memory's full. Okay. I want to know what the average monthly return is, compounded. And I can show you guys an compounded equity reading too, because on the dashboard, this is a non-compounded equity. It says 15.79%. That doesn't seem right. Okay, hang on. The non-compounded monthly return was 16%. I want to know sometimes AI is stupid. Monthly return. Okay. While it's doing that, let me show you. So here's the compounded monthly return. Since 2018, a 50% risk, non-compounding returns 700%, while compounding is 36,377%, which is pretty good. What? It says the compounded monthly return remains 16%. That doesn't seem right to me. I don't know. I'll be back with an update for you guys. We're not going to dive in right now, but if you want to see the dashboard for free, there's a link down below. You can check it out, okay? Go fill out that link and you get in the dashboard for free.